Hi everyone, it is Wednesday, June 12th. This is Liam McMahon. I'm a currency strategist over at globalfxclub.com, and I'm here today to talk to you about the Australian dollar and the possibility that we have, we've seen the beginning of a fairly significant bounce in the Australian dollar. Um, the currency has been heavily sold the past several weeks. Some Aussie crosses falling as much as 1,000 pips. Some of the reasons behind that is an increasingly dovish Reserve Bank of Australia, and some poor data out of Australia and China has really dragged down the currency pair. But this might be one of these times where we've fallen too far, too fast, and we've sort of outstripped the fundamental and technical case for Australian dollar shorts, and we may be in for a fairly significant upside move over the next week and a half. We have Australian unemployment numbers tonight at 9:30, 9:30 Eastern time. They may provide a spark to sort of increase the rally that we've started to see in Australian dollar pairs. So I'm going to run through a few Aussie crosses, talk about why I think we may be seeing the beginning of a significant correction in the Australian dollar, and where you can best attack those trades. So please take a moment to pause the recording and read the risk disclaimer, which is now on your screen, and then we'll move to the charts. Alright, so this is Euro Aussie. We've already seen Euro Aussie start to break down. We're about 130 or so pips down from this trend line break. We broke a trend line, we retested, and we fell. What to me is more significant than the trend line break is actually the break of this 100 and this 50-hour EMA here on the hourly chart. You can see here going back even as far maybe 2 weeks ago or so, 3 weeks ago. The 100 EMA here, this green line, has been pretty well supportive of this pair. We did briefly dip below it and test this 200 here. But for the most part, it's been well supported by this red and green lines. We broke this red line on a very strong candle. We broke the green line shortly thereafter, meaning that, to me, I think at least 138.25 or so, which is this 200-hour EMA, is certainly in sight, and if we can close below there, we may see the beginnings of a more significant reversal. Worth noting, we do have a topping pattern here. This is a head and shoulders. We did break a neckline. Alright, so it does seem to me that this could be a small top. If we jump out to the daily chart, okay, you can see if we close the day like this is a fairly powerful two-candle reversal. We have a nice hammer here yesterday, and we're forming right now a very strong bearish candle here on the Australian dollar. The one thing that is worth noting, or the Euro Aussie. The one thing that is worth noting is we did just fill a gap, that gap higher that we had at the beginning of this week. We did just fill that, so we may start to see a little bit of a push higher as those of people who are just hunting the gap fill start to cover their shorts. But I do think that if we can close anywhere near the lows of the day, anywhere really below 139.57 or below, we could have a very strong bearish two-candle reversal pattern to play with here on Euro Aussie. In terms of targets on Euro Aussie, 132.16 is the 50% fib of this strong rally from 122 to 142. It's also where we're likely to encounter some daily moving average support here, as the 50 EMA is trading just below that figure right now. I would also be keeping an eye on 133. I'll show you why if I jump back out to the weekly chart. Keep your eye on this weekly candle. And we still have several days and several key events before we close, but that is the making of a monster reversal candle on Euro Aussie here on the weekly chart. Alright, so I'd also be keeping my eye here around 133.40 or so, as we'll retest this breakout line here, and that also may provide a nice opportunity to reestablish some longs again as the correction may be ending around there. So that's Euro Aussie. Now let's jump to Aussie dollar. And we'll talk about why I think Aussie dollar may be getting ready to reverse. Okay, so been watching this for a while. We have a very nice inverse head and shoulders here on the hourly chart of Aussie dollar, which means that if you're looking for longs, a retest of about 95 should provide a very nice entry. The measured move of this inverse head and shoulders pattern basically 96. But inverse head and shoulders patterns, again, often mark a bottom. So 96 may be the start. We may continue higher from there. We also, another way of looking at this is looking at it as a descending wedge. All right, so something along these lines here. These lines here. All right, descending wedges, also reversal patterns, and in this case, a retest of around 94.70 could provide an opportunity for further longs. The other reason, again, that I like this reversal on Aussie dollar is, again, we broke above these two key moving averages. You can see the green line here, very key resistance, the red line back here, and then here, very strong resistance. We're above both of those. We actually did, again, move above this 200-hour EMA as well, which we did once before falling lower. But I do think that there's another opportunity here for Aussie dollar longs, this time against the U.S. dollar, based on two potential reversal patterns, this inverse head and shoulder and this descending wedge. Again, let's jump out to the daily chart. Let's talk about targets. Another very big reversal candle here on the daily chart on Aussie dollar. We draw these fibs. Again, 50% fib is 99.50. I think that would be a reasonable target. We could even maybe squeak up as high as 101.50, or really just 101. That's 6.18% fib, and then we get right into the bottom of this previous broken range. That kind of squeeze higher could be actually a very great trading opportunity. We could actually see it happen pretty quickly as shorts start to cover and we start to pick up some stops and accelerate to the upside. Again, with that Australian employment data tonight, that could be the start of that. All right, so keep your eye on those setups on Aussie dollar. Finally, Aussie CAD is another one that I've been keeping an eye on. Another reversal candle, again, similar to Aussie dollar. The advantage with the Aussie CAD is it reduces your dollar exposure, lets you trade the Aussie against the Canadian dollar rather than the US dollar, and avoids some of the shenanigans that may be happening with the US dollar lately. Same thing, inverse head and shoulders, all right? We broke this moving average resistance. We do have to contend still with this 200-hour EMA. You can see this tan line, very significant. We have a while to go until we get there. But this is the inverse head and shoulder neckline. That's about 96.70, 96.80, somewhere in that area. Possible opportunity, again, for a long measured move of this inverse head and shoulders. Takes us basically right into that resistance, that 97.68 200-hour EMA. All right, so that's what I'm keeping an eye on here. I do think that there is a distinct potential for an across-the-board Aussie dollar reversal and correction. Again, I do think time frame wise, I'm thinking next 2 weeks the Australian dollar, next 2 to 3 weeks the Australian dollar may be rallying, but I do think like 6 months from now we'll see the Australian dollar lower again. I do view this as a correction, but we have lots of room for a correction considering how far and fast this move has been. If we real quick click back out to the daily chart of Aussie CAD, you can see Aussie CAD has fallen from 107.16 to 95 in a variant sense, basically from March to June. So a remarkable move lower that really could use some unwinding. So that's what we're looking at here. As always, if you have any questions, head on over to globalfxclub.com. We'll be happy to talk to you there. Enjoy the rest of your trading week, and I will talk to you soon.